On March 9, 2023, a few hundred people with smartphones did something that no army, no hacker, and no rival nation could ever achieve. In just 48 hours, they vaporized $42 billion. They didn't do it because they were greedy. They didn't do it because they were malicious. They did it because they were terrified. But here is the most insane part. By trying to save their own companies, these tech elites accidentally destroyed the one thing they needed most to survive. This is the story of how the smartest people in the world committed the ultimate act of financial suicide. For 40 years, Silicon Valley Bank, or SVB, was the undisputed king of the tech world. If you were a founder with a dream in Palo Alto, you didn't go to Chase or Goldman Sachs. You went to SVB. They weren't just a bank. They were a community. They understood the high-risk, high-reward nature of startups when no one else would. But here's the thing about communities. When one person starts to run, everyone else follows. And that's exactly where the nightmare begins. You see, banking is a game of confidence. We like to think our money is sitting in a vault, wrapped in neat stacks of $100 bills. It isn't. It's out in the world, working. But SVB had a unique problem. Their customers weren't your average Joe with a mortgage. They were venture capitalists and tech unicorns. They were all connected, all on the same Slack channels, and all prone to the same groupthink. Now, this is the part nobody talks about. SVB was actually flush with too much cash. During the tech boom of 2021, they were drowning in deposits. But instead of playing it safe, they made a bet that would eventually cost them everything. To earn a little extra yield on all that cash, SVB bought billions of dollars in long-term U.S. government bonds. These are supposed to be the safest assets on Earth. But there was a catch. As the Federal Reserve began aggressively hiking interest rates to fight inflation, the value of those old bonds started to plummet. Suddenly, the bank's safe investments were worth billions less than what they paid for them. On paper, they were hemorrhaging money. But here's where it gets worse. As the tech market cooled down, startups stopped getting new funding. They started withdrawing their cash from SVB to pay their bills. To give them that cash, SVB had to sell those bonds at a massive loss. Now, in any other industry, this might have been a quiet corporate restructuring, but this is Silicon Valley. When SVB announced they needed to raise capital to cover those losses, the signal didn't just travel, it exploded. This was the moment the billionaire stepped in, and not to help. Powerful venture capitalists like Peter Thiel's Founders Fund looked at the numbers and saw a sinking ship. They didn't call the bank to help patch the hole. They sent a message to their portfolio companies: get your money out, now. This is the part of the story where the irony becomes suffocating. These venture capitalists had spent decades building the infrastructure of the tech world. SVB was the primary lender that allowed their startups to survive the early years. By telling everyone to flee at once, they weren't just saving their cash, they were detonating a nuclear bomb in their own backyard. Within hours, the digital bank run was on. This wasn't like the Great Depression where people stood in lines outside. This was a bank run at the speed of light. $42 billion was requested for withdrawal in a single day. The bank literally didn't have the physical or digital time to process it. But here is the twist that nobody saw coming. As the bank collapsed, the very people who triggered the run realized they had trapped themselves. Thousands of startups suddenly found their entire payrolls locked inside a defunct bank. Founders realized they couldn't pay their employees on Monday. The safety they sought by withdrawing had created a systemic catastrophe that threatened to wipe out the entire tech ecosystem. They had burned down the only bank that understood them, and now they were standing in the cold with nothing but their pride. Now this changes everything. The aftermath wasn't just about one bank. It was a revelation of how fragile our digital financial system really is. It proved that in the age of Twitter and instant transfers, a bank can be solvent on Monday and dead by Friday. It forced the U.S. government to step in with an emergency bailout to prevent a total contagion. But the damage was done. The trust was gone. The billionaires had protected their individual interests at the cost of the very foundation they stood upon. We like to think of these tech titans as the smartest guys in the room. We think they have a plan for everything. But the collapse of SVB showed us that even the most brilliant minds are susceptible to the oldest human emotion: panic. They built a world of hyperconnectivity, and then they were the first ones to be consumed by it. They didn't just lose a bank, they lost the illusion of their own control. So the next time you hear about a safe investment or a tight-knit community, remember the 48 hours that changed everything. In the digital age, the person sitting next to you isn't just your neighbor. They are the person who might accidentally pull the plug on your world. The war for your money isn't happening in boardrooms anymore. It's happening in your pocket, one notification at a time.